If you buy health insurance through the ACA Marketplace, there is a major change coming in 2026 where if you're not prepared for it, it could cost you thousands of dollars. And it's that the income cliff is coming back. In this video, I'm going to explain exactly what the income cliff is, who it's going to hit the hardest, and what steps you can take to avoid a nasty and very expensive surprise at tax time. I'm Sebastian. I help people navigate health insurance every day. I've seen what works, and I've also seen what can cost people big time. So what exactly is changing? So back in 2021, it was the American Rescue Plan, which was signed into law. And later, the Inflation Reduction Act extended those provisions. Where essentially what happened with these provisions is that more people qualified for more of a subsidy. So people in general got more of a subsidy, making plans more affordable. And also those making over 400% of the federal poverty level now could apply for a tax credit when they previously weren't able to. So basically, middle to higher income individuals and families can now qualify for a subsidy. So basically, more people got more tax credits. Now, these provisions are set to expire at the end of 2025, which means starting next year, January 1st of 2026, premiums are going to go up quite significantly through the ACA Marketplace, and the income cliff is coming back. So I'm actually going to explain what the income cliff is now. Before 2021, ACA subsidies had a hard cutoff, which meant if you made even $1 over the 400% federal poverty level, then you cannot qualify for a subsidy whatsoever. But let's just say that you thought you would be under the 400% federal poverty level, so you got subsidies throughout the year, but then at tax time, you figured out that you were over that threshold, over that 400% federal poverty level. Even by $1, you would have to pay back the entire subsidy that you received for the whole year, the entire thing. That could be $5,000, $6,000, $7,000 in tax credits that you weren't supposed to get originally. Okay, and to give you a little visual, we have a little chart here that shows the subsidy amounts, and let's actually change this, the subsidy amounts, and the federal poverty level percentage. So you can see that, okay, the top line, the top curve is how the ACA subsidies work right now, right? And the lower your income, the lower FPL you are, the more of a subsidy you receive. And as you start to make more money, the tax credit or the subsidy starts to go down, all the way down. And even you still have a subsidy after the 400% federal poverty level, and then it eventually drops to zero. Okay. Now, how it was before 2021 and how it's going to be starting in 2026 again is you have subsidies, right? The subsidies aren't going to be as high as they are right now. And as soon as you hit the 400% federal poverty level, your subsidies instantly drop to zero. And that's why they call it an income cliff, right? Subsidies are going down, and then all of a sudden it drops to zero as soon as you hit 400% federal poverty level. So you're probably wondering, what exactly is 400% federal poverty level? How do you actually know what income would be considered off of, jumping off the income cliff, would just say? So we actually have the federal poverty level chart for 2025. 2026 chart hasn't been released yet, so we can use 2025 as a ballpark. You might be seeing a lot of numbers on the screen here, but all you really need to look at is you need to find your household size, which is on this section. So find your household size, and then look at this side of the screen where it says 400%, and that is the income cliff. Right. For example, let's just say that you're a household size of 3. If you make over 103,280 for the year, then you have jumped off the income cliff, we'll just say. Right. And that means that you do not qualify for a subsidy whatsoever. But let's just say that you project, 70,000, right? You project 70,000. All right, we're not going to fall off the income cliff, but you get a raise, you change jobs, you get a bonus, and you end up making 104,000, right? Then that means that the subsidies that you've received for the entire year, you're going to have to pay that back at tax time. So that is why it's so important to just be aware of this income cliff, right? Even if you're way below the 400% federal poverty level, you think you're going to be making, 50,000, your household size of 3, you still just have to be aware of this number because life happens. Things can change. You could get a bonus at work, and all of a sudden you're making over, the 400% federal poverty level, and you have to pay back all of the tax credits. So, how do you actually avoid falling off the income cliff? It's more important than ever to get your income as accurate as possible. Don't just make a guess. I mean, speak with your accountant if you have to. Use your pay stubs, your tax returns from previous years, your W 2s, whatever you can find to give an accurate projection for the year. And make sure that the income on your application is always up to date. I mean, set reminders to check it every month, every quarter, and just make sure that the income on your healthcare.gov application or your state based exchanges application is always up to date. Now, another tool that you can use is an HSA, which can lower your taxable income. So if you're pretty close to that income cliff and you don't want to risk, going over the income cliff and paying back all those subsidies, then you can use an HSA to lower your taxable income, which would keep you under the 400% federal poverty level. I made an entire video breaking that down, which I will link at the end of this video. Now, there is one more thing I do want to cover before I link that video about HSAs, and it's that if you are losing your subsidies or your plans just become way too unaffordable due to the premiums increasing, there are alternatives to the marketplace, right? That's not your only option. For example, there is short-term medical, there is fixed benefit plans, health shares. I mean, each of these work very differently. None of them are perfect, but some of them can provide affordable coverage, when ACA premiums become unaffordable. Now, I'll be breaking down these alternatives in an upcoming video, so make sure to subscribe so you don't miss out on that. So here's the bottom line. The enhanced subsidies are ending. The income cliff is coming back in 2026. And if you're not planning ahead, this could cost you thousands of dollars. So make sure you're projecting your income carefully. Look into HSAs if you're close to the income threshold, and have a backup plan if ACA coverage becomes unaffordable. Now, if you found this video helpful, make sure to like and subscribe. I'll keep you updated as we get closer to 2026 and walk you through all of your health insurance options. And in this video, I break down how HSAs work, so make sure to watch it.